Welcome to Thursday's Market SITREP. Matt Buckley, call sign Whiz. Had a great webinar yesterday afternoon for Wealth Creation Investments at 3 p.m. talking about their managed account program. If you missed it, we're going to do another webinar tonight at 9 p.m. Again, that's the managed account service with Wealth Creation Investments. You can get all the details about this incredible new service for those of you who really don't have time to manage your own trading account. Stop by at 9 p.m. tonight. Click on the link in this email to automatically register for tonight's webinar. Now, let's get started. Obviously, what's going on in Japan is definitely weighing on our market. The Japanese market officially hit bear market territory, and you might be sitting there, well, why do I even care about what's going on in Japan? Well, you should, because about a year ago, and especially more recently, Japan has taken a page from the How to Print Your Way Out of a Mess book that the U.S. Fed is currently writing and hasn't finished writing. So what happens in Japan is, with our little brother, so to speak, is pretty much what potentially could happen to us. So, as I've joked about before, with some black comedy there, is that Japan is now on a kamikaze mission. They're going to try and print more yen and print more money and get the government involved to try and get themselves out of this mess as their stock market implodes, as their bond market implodes. And if that doesn't work, what else can they do? Well, welcome to America, spelled with a K, because that's what we're doing right now and trying to figure out if going downhill at 1,000 miles per hour with both engine fire lights on in the clouds and mountainous terrain is a good idea to add more power at that point or not. So that's why the Japanese market is sitting like that. Also, taking a look overseas, Mario Draghi had a press conference yesterday, and there really wasn't any hey, we're going to do whatever it takes to save the euro comments or anything like that. But it was a porridge press conference. Not too hot, not too cold. Hey, we're still hanging out here and still going to kind of sort of maybe do whatever it takes to keep the euro airborne. So anybody sensing a theme here? In Japan, Bank of England, Draghi, the ECB, and the Fed, it's all fake, folks, right? And here's a couple charts I want you to take a look at. Remember last Friday's University of Michigan Consumer Confidence Report? Look at this chart. Back to '96. Every time consumer confidence has kind of peaked or hit a high, the market's imploded. Look at this. Consumer confidence, yay, and the market implodes. Here we are right now again, and obviously looking at the left side of a chart is like driving around the Daytona 500 looking in your rearview mirror, but let's kind of be real here that and look at, first of all, the channel of consumer confidence. I mean, look at the high we were at all the way back in the mid-'90s, and look where we're topping out now. But look what happens every time consumer confidence really hits a new high in a market such as this. So for all those folks that are running around saying, wow, great consumer confidence, great this, great everything, consumer confidence at a high, that's what happened to the market. There's a peak in consumer confidence after a good run, market at a high, implosion. Here's a great run in consumer confidence with consumer confidence at a high, and now this market's up here in the hypoxosphere, so to speak. So we need to be very, very careful, folks. Our flight schedule today was the weekly jobs report came in line with expectations, but obviously the market is literally in a holding pattern, waiting for the unemployment numbers and the non-farm payroll numbers to land tomorrow morning. And that's going to really drive the direction of the market. But it's going to be interesting to see how it drives the direction of the market. Is good news, meaning people are finding work, unemployment rate goes down for the good reasons, and the market does what? Is the market going to be happy that, hey, the economy might actually be turning around? Or is the market going to be like, well, if that is the news and the unemployment rate's going down, the Bernac has said he's going to get out of the way of this market and stop propping it up if he sees good numbers. So again, we're in bizarro market, folks. And it's very, very interesting to be trading where we are. I put on a bearish double vertical yesterday on the VIX because every time we've seen volatility spike in the past 6-7 months up to about the 17-18 level where we are right now, what's it do? Freak out, pull back. Freak out, pull back. Freak out? Are we going to keep freaking out? We might, folks. The VIX right now at 1736 could go higher, right? And we get some bad or good news, still trying to figure out which one. Tomorrow we could see the VIX spike even higher. But in the history of the VIX, and the nominal VIX is at a 20. The resting heart rate of the VIX is supposed to be around a 20. It's been around 12.5, 13 lately. But as you can tell with volatility, every time we think the world's going to end, it doesn't. The sun comes up. Whether it was the financial crisis, the Eurozone crisis, us losing our AAA credit rating, holy embarrassment, Obama, or other stuff that creeps the market out, volatility tends to get back to its mean, to its resting heart rate, which, as I've said recently, has been around this 13, 12.5 level. So I put on a bearish double vertical on volatility, which seems counterintuitive. Well, Whiz, volatility is going up. Yep, tends to go down too. Okay, because I don't think currently what's going on in the market is the big one, so to speak. The Fred Sanford and Son, this is the big one, Elizabeth, I'm coming. I don't think it is. The Fed is not going to wake up and say, surprise market, we're ending our quantitative easing. Now, they might do some stealth stuff and try and float some trial balloons, but someday this is going to end. And again, you got to make sure you got a chair, folks, because if you don't, you're going to get crushed. You're going to get absolutely crushed when this fake thing, this fake market comes to an end. I think it's going to make this 2008 crash look like a walk in the park. And I haven't even covered, and I cover this in my live trading, about potential black swan events. Syria getting uglier. Going to be an absolute battleground between, it's a Cold War fight heating up, the East versus the West. China and Russia supporting Syria. Us, well, not us, the United States, since the president hasn't done anything except move his red line. Europe's actually doing something. And we got Israel versus Iran. We have a lot of, we have China, Japan, Taiwan. We have about 7 countries in the Pacific that are all fighting over the same piece of water. A lot of potential black swan events out there that aren't good. There's really not a lot of sunshine and lollipops running around the world right now to keep these markets propped up, except what? Central bankers. And there's only so much ink in the world, folks, to print dollars. Okay? All right, so I got to run. Got a lot of trading to do today. As I said, if you missed the managed trading account presentation yesterday from Wealth Creation Investments, click on the link in this email to go ahead and register to attend tonight. And I'll see you guys tonight at 9 p.m. to talk about the managed account trading service from Wealth Creation Investments. Happy hunting. Make sure you hedge, and I'll talk to you later.